One day. Spend a single day of the month in a designated combat zone, and your entire military paycheck for that whole month can come back to you free of federal income tax. And there's a quieter move stacked on top of that one that can turn this into money the government never taxes, not when you earn it and not when you spend it decades later. We'll get there.
Hey everyone, Erica here. The version going around online calls it free money, and for once the internet is mostly right. The rule is the Combat Zone Tax Exclusion, written into IRS Code Section 112.
And the screenshots never tell you the catch that quietly decides how much you actually keep, depending on a single line in your rank. Stick with us, because that line changes everything.
Chris jumping in. Here is the part people miss. If you are enlisted or a warrant officer, every single dollar of pay for that month is excluded. No dollar limit at all.
I'm Elena, and here's where it breaks for a commissioned officer. Your exclusion is capped at the highest rate of enlisted pay plus imminent danger pay. Above that line, you are taxed like normal.
Let me put the two side by side, because this is the whole story in one picture. Enlisted and warrant. Unlimited. Every dollar that month is tax-free. Commissioned officer, capped at the top enlisted rate plus danger pay, and only the part under the cap is excluded.
And one warning the hype never mentions. This excludes federal income tax only. Social Security and Medicare are still withheld out of your pay. Your future Social Security still counts that work.
Good news on the paperwork though. You do not file anything to get this. Finance flags your combat zone months and your leave and earnings statement shows the pay already excluded.
A lot of you wrote in with the same worry before we even rolled, so let's put it on the table. Elena, take the one everybody keeps asking.
Yes, and it's the right thing to be nervous about. Here's what folks keep asking. If I'm only in the zone for 2 days, do I get the whole month tax-free? Or just those 2 days?
Hold that exact question, because the answer is wilder than you think. Next up, which months and which places actually count, and the one-day rule that makes this so generous.
Here's the rule that decides everything, and it's almost absurdly generous. 1 day in the zone counts as a full month. Arrive on the 30th, and that entire month is excluded. That cuts both ways in your favor. The month you fly in and the month you fly out are usually both full tax-free months, even if you were only physically there for a sliver of each.
So the math people fear, prorating it down to your exact days, just doesn't happen. The page says full month, and it means full month.
Now the other half is where, designated by executive order, the zones are a specific short list, not wherever it feels dangerous. Afghanistan, the Arabian Peninsula, and Kosovo are the three.
Lay the actual designated areas out, because guessing here is how people get a nasty surprise at tax time.
Those three are executive order zones. Then Congress added one more, the Sinai Peninsula of Egypt, treated as a combat zone. That gives you 4 places where the break applies.
There's also a second tier worth knowing. Certain direct support countries, places like Jordan or Djibouti, get certified for the same break when you're supporting one of those operations.
And here's the failure mode I want you to plan around. You have to be present in the zone or hospitalized because of service there. Orders alone or a nearby base do not do it.
That's the trap. A duty station 100 miles from the line feels close, but close is not in. The designation is geographic, not vibes. Chris, somebody hands up on this every time. Field that one for us.
Yeah, so the question I get is simple and important. How do I actually prove I was there if the LES ever gets questioned, and what do I keep?
Keep your orders, your travel vouchers, and the LES statements that show the combat zone exclusion line. Finance is reliable, but you are the backstop. Paper protects you.
Quick, honest ask while we are here. If this has been worth your time so far, hit like, then subscribe and ring the bell. I know everyone asks, but this one is free, and it is how a small channel like this actually grows. Okay, this is the move I teased at the very top. Tax-free pay is good. Tax-free pay turned into tax-free wealth is the part almost nobody sets up in time.
The vehicle is the thrift savings plan, the Roth side of it. Because your contributions are already tax-exempt combat pay, that money is never income taxed going in. And here's the rare part. In a qualified withdrawal, the Roth earnings also come out free of federal income tax. Tax-free in and tax-free out.
I want to stress test that against the traditional side before anyone defaults into it, because the difference is where people quietly lose money.
This deserves a real expert, not us guessing. Let me call someone who lives in this exact corner of the tax code. Erica, who do we have on the line?
Bringing in Professor Hollis, who knows military retirement account taxation cold. Professor, the Combat Zone Roth versus traditional question, what do people get wrong?
Thanks for having me. The mistake is treating both TSP balances the same, with tax-exempt combat pay in a traditional balance. The contributions come out tax-free, but the earnings on them are taxed as ordinary income later. The Roth balance is the rare exception, tax-exempt money in and qualified earnings out with no federal income tax at all. For a young service member, decades of untaxed growth is the whole ballgame.
Hold on. Low bracket now, high pension later? Doesn't traditional win?
Fair pushback and normally yes. But combat pay breaks the usual logic because the contribution is already untaxed. So Roth captures the tax-free contribution and adds tax-free growth, while traditional throws that growth away. Here, Roth usually wins.
Here's the rep that makes it real. A deployment also lifts your annual contribution ceiling for that window so you can pour more in. But it only works if your Roth election is set before you go.
Exactly right. My one parting thought, set it before wheels up because you cannot backdate these contributions. Thanks for having me on.
Thank you, Professor Hollis. So the assignment writes itself. Set the Roth election before you deploy so you don't lose the window. Log in and lock your rate today.
That distinction, tax-free contribution versus tax-free growth, is the one I'd want every deploying member to carry out of this video.
Let's turn this into a number you can feel. Meet Sergeant Lopez, an E5 with a spouse and one kid, deployed 6 months to a designated zone. We're not going to pretend at a single exact tax bill, because brackets and state rules vary. But we can show how the tax-free months stack into the kind of savings worth setting up for.
6 months of pay, federal income tax-free. On a representative E5 with dependents, picture roughly $400 of federal tax saved per month from the exclusion.
$400 a month, across 6 months in the zone.
And every dollar she routes into the Roth TSP during that window is money that's now untaxed going in and untaxed coming out. Add it up, and that's roughly $2,400 in federal tax she simply keeps, before we even count the growth on what she invests.
Lower income households get one more lever. You may elect to count non-taxable combat pay as earned income for the earned income tax credit, but it is a true fork, not a freebie. The election can raise your credit or shrink it, depending on your numbers. Run it both ways in tax software or with a free mill tax preparer before you choose.
Now the honest part, because I bust hype for a living and I won't sell you this one wrong. This is real, and the Combat Zone Roth is a rare, never-taxed opportunity, but never chase danger for a tax break. The deployment decision is about the mission and your family, full stop. The tax move is what you do once that decision is already made.
But if you're already going, set up to keep every dollar. Don't change why you deploy, but absolutely change how you prepare. Set the Roth, keep your records, and weigh the EITC election.
If you carry one rule out of here, make it this. The tax break is automatic, but the wealth is a choice you make before you ever cross that line. So here's the whole thing in one breath. One day in a designated combat zone makes that month's pay free of federal income tax. The real prize is routing it into the Roth TSP.
Here's what you keep from tonight. You can open the TSP in 5 minutes, flip your election to Roth, and lock in a tax-free future before you ever get the deployment call. That's the rep.
Next time, we'll stress test the deployment paycheck itself, every special pay and allowance that turns on when you cross that line, and which ones survive contact with the tax code.
If this cleared up something the screenshots never explained, hit like and subscribe so we can keep building this all-branch series for you and the people you serve with.
Here's the one we want you chewing on. If you deployed tomorrow, would you put your combat pay into the Roth TSP or the traditional one? Tell us why in the comments.
The comment section is not a financial advisor. Check the source instead.
8.9, Tiffany. Rounding down because grading is a science, not a feeling. This is Professor Erica. Thanks for watching and signing off.